Sonal Varma of Nomura is joining us on the phone line from Singapore. Sonal, very good morning to you. Thanks so much for taking our call. Sonal, what do you make of the economic rationale presented by Moody's in their report? It's interesting that it's coming at a time when all of us domestically were worried about what's going to happen to growth, what's going to happen to fiscal. But these guys, of course, are taking a medium-term view as they would and saying that medium to long-term, all of this is positive, the reforms that is.
Hi, Raya. Good morning. I think, I think most of us post-implementation of GST, bankruptcy reforms and, now the recapitalization for banking system were generally expecting, positive move on ratings. But the view was that the move would come sometime in 2018 when GST actually leads to more revenue. So the timing of the announcement is clearly a positive surprise. And with this move, actually, Moody's rating is now one notch above both Fitch and S&P. So Moody's has clearly taken a forward-looking view that these reforms will lift India's growth potential over a period of time, will lead to more revenues. And, one of the key constraints that they've always highlighted that India's government debt to GDP at, above 65% versus BAA median of, between 40 to 45% has been highlighted as a big constraint. But they have taken a view that the reforms implemented would take care of, any negative spillovers from higher debt to GDP ratio. So it's clearly a forward-looking view, and the timing of the announcement is a positive surprise.
Exactly, Sonal. That debt point was a little confusing because, that's what they have hammered in for the last few sort of releases that they have said that our debt to GDP is far higher than peer countries. And they acknowledge that even now it's at 68% of GDP in 2016, while the rest of the median was about 44%. How are they anticipating that these reforms will play into that dynamic? They're expecting a widening of the tax base in a considerable fashion. Is that sort of the rationale that they're playing out on?
Yeah, looking through the, rationale that has been put out, the anticipation is that, GST is going to lead to more revenues over a period of time. B, the implementation of Aadhaar, etc., is also leading to both reduction in some of the leakages on the subsidy side and also leading to, more tax compliance. The other reforms, on the banking sector side is going to strengthen the balance sheets and, set sort of the foundation for more stronger long-term growth potential, which will have its own positive impact on the economy. So, they seem to have taken the view that these reforms will lead to, some savings on the expenditure front, more tax compliance, more revenue as a share of GDP, higher growth potential, and therefore overall, an improved outlook.
Just one last question. Is there estimation of growth in sync with what you think is going to play out? So I think they're saying 7.5% for next fiscal. I think they, map their fiscal years a little differently. And then they seem to be, as you said, expecting an increase in potential growth rates over a period of time. Is that in sync with what you expect?
Well, I think given the focus on, productivity enhancing reforms, including GST, and given the focus on infrastructure spending, which over a period of time should crowd in private investment and lead to more capital stock, I do think, that from a forward-looking 5-year time frame, India's potential growth should go higher vis-a-vis the last 5-8 years where it's actually gone down. So yes, we do think potential growth in India is going to improve over the next 5 years. And we also believe that cyclically the economy has bottomed out. We are expecting, the GDP numbers that are set to come out in November to be above 6%. And, obviously the economy it's been a year now since remonetization, as some of the working capital issues with respect to GST get cleared. I think India will see more benefits from this global export upcycle, which currently we have not benefited at all from. So cyclically, we do think economy is headed higher, and over a 5-year time frame, we do think potential should also improve.
Okay, Sonal, lovely to speak to you. Thanks so much for taking the time to speak with us this morning.